What if I told you the Federal Reserve is quietly slipping the markets another hit of their favorite drug right now in December 2025, and risk assets like Bitcoin, Tesla, gold, silver, and crypto miners are already buzzing from it? Picture this: euphoria returning, prices pumping, everyone chasing the high again. Stick around, because this stealth move could ignite the mother of all rallies or inflate the biggest bubble we've ever seen, setting up a crash that makes 2022 look like a mild hangover. Today we're diving deep into quantitative easing, QE, and why it's straight up cocaine for the financial system. That intense rush, confidence explodes, asset prices go parabolic, risk feels like a joke, and suddenly everyone's a trading genius. But here's the dark side. Tolerance kicks in quick. You chase bigger doses for the same thrill. Then withdrawal hits like a freight train. Savage crashes, heart-pounding volatility, and that desperate itch for just one more hit. This has been the Fed's vicious cycle for over 15 years. And as of this very week, they're sliding back into relapse mode, but stealthily, so no one calls it what it is. Let's unpack this bombshell. The analogy couldn't be more spot on. Cocaine surges dopamine, turning you into a superhuman, invincible, euphoric. QE does the exact same to markets. The Fed fires up the printing press, creates trillions in reserves, scoops up bonds and securities. Long-term rates crash, liquidity gushes everywhere, and investors stampede into riskier bets. Stocks rocket, crypto absolutely moons. Real estate turns into a frenzy. It's pure, unadulterated market bliss. Wealth effect on steroids. But reality bites. Those early QE rounds post-2008, legendary highs. The pandemic mega QE, balance sheet ballooned from $4 trillion to nearly $9 trillion. We got the everything bubble. Yet each hit delivers less kick. Diminishing returns set in. And trying to quit cold turkey? Forget it. The system screams in agony. History is littered with the wreckage of botched withdrawals. Flashback to the 2013 Taper Tantrum. Deep in QE3, buying $85 billion a month, Bernanke casually hints at tapering. Boom. Markets implode overnight. Bond yields surge, emerging markets hemorrhage. Stocks plummet. The Fed panicked and slowed the taper. Then the post-COVID nightmare. Trillions flooded in during 2020 to 2021, fueling the meme stock mania and crypto explosion. But 2022's aggressive tightening, rapid rate hikes plus QT, delivered pain. The worst combined stock and bond returns in a century. Regional bank blow-ups like Silicon Valley Bank. And inflation that refused to die quietly. Even echoing the Great Depression, the Fed stayed too tight too long in the early 1930s, turning a recession into a decade-long catastrophe. Pattern clear? Every single time they try to wean off the easy money, something critical breaks, and they cave. Fast forward to right now, December 15th, 2025. The Fed's latest meeting just dropped. Another 25 basis point cut, bringing the federal funds rate to 3.5 to 3.75%. But the stealth bombshell everyone's whispering about, quantitative tightening, wrapped up on December 1st, way ahead of schedule. And now, they're launching reserve management purchases, snapping up roughly $40 to $50 billion a month in short-term treasury bills to maintain ample reserves and dodge any money market chaos. Chairman Powell insists it's purely technical. No yield curve twisting, just short-term stuff, not full-blown QE. Yeah, right. Expanding the balance sheet again, pumping fresh liquidity straight into the veins. The markets know better. This is Stealth QE, baby, and the risk-on party is already restarting. Gold blasting past all-time highs, silver up over 50% year-to-date as ultimate inflation hedges. Bitcoin's been a wild ride, but stabilizing and poised with leveraged plays like MicroStrategy, Sailor's all-in Bitcoin beast, and miners such as IREN exploding on its AI data center pivot, and CIFR absolutely feasting on liquidity signals. Tesla's holding firm, boosted by its massive Bitcoin treasury holdings. Short-term outlook? Buckle up for the rush. This hidden injection is jet fuel for rallies in Tesla, Bitcoin and its proxies, precious metals, and high beta miners like IREN and CIFR. Risk appetite roaring back. But zoom out. Long term, this addiction spells trouble. Endless liquidity piles on unsustainable debt, reignites inflation risks, and blows ever larger bubbles. The next inevitable crisis? It'll demand a dose so massive it could shatter the system. The Fed's hopelessly trapped. They can't ever truly normalize without unleashing hell. If you're positioned in these risk-on assets, savor the high while it lasts. But always have that ironclad,